I didn't lose money because I was wrong about direction. I lost money because I arrived early and left too soon. That sentence alone carries the quiet pain of millions of traders. And today, I want to talk to you about the most underestimated, most misunderstood, and most emotionally difficult edge in the market: patience. Not the motivational poster version of patience. Not the fake calm we pretend to have while staring at a 5-minute chart. I mean real patience. The kind that Nicolas Darvas discovered the hard way. The kind Jesse Livermore warned about repeatedly. And the kind most traders never survive long enough to develop. I want you to imagine this with me. You spot a stock. It's strong. Volume is expanding. The story makes sense. Your logic is sound. You enter early because you don't want to miss the move. And then, nothing happens. Price drifts sideways. It dips slightly. Your confidence erodes candle by candle. Your mind fills the silence with fear. And before the real move even begins, you're gone. Then, almost cruelly, the stock explodes in the exact direction you predicted. That moment right there, that's not a technical failure. That's a patience failure. Nicolas Darvas didn't beat Wall Street because he was faster. He beat it because he was willing to wait when others couldn't. And Jesse Livermore, long before Darvas, said something most traders ignore until it is too late. It was never my thinking that made the big money for me. It was my sitting. Let that sink in. Today's markets condition you to act constantly. Notifications, alerts, opinions. Social media trades screaming urgency. Everyone is always early, always about to break out. Always can't miss this one. But Darvas didn't trade that way. Livermore didn't either. They understood something modern traders are rarely taught. The market pays you for waiting, not for predicting. In this documentary-style breakdown, I'm going to walk you through why trading without patience is the silent killer of accounts, why most traders lose before the real move even starts, and how Darvas Box Theory wasn't just a technical method. It was a psychological shield against impatience, overtrading, and emotional exhaustion. This isn't about indicators. This isn't about entries. This is about the uncomfortable space between knowing and waiting. Darvas was a dancer, not a Wall Street insider. He didn't sit on trading floors. He wasn't glued to news feeds. He waited for price to prove itself, to earn his attention. At Livermore, despite his legendary wins and losses, came to the same conclusion from the opposite direction: impatience destroys even the most brilliant analysis. Here's the uncomfortable truth most traders don't want to hear. You don't lose because your strategy doesn't work. You lose because you interfere with it emotionally before it has time to work. And that interference almost always comes from impatience, the need to feel productive, the fear of missing out, the anxiety of doing nothing while price consolidates. Be honest with yourself. How many times have you exited a trade right before it worked? Comment below. I want to hear your experience. As we move forward, I want you to listen not like a student hunting for setups, but like a trader examining their own behavior. Because patience isn't something you add to your system. It's something you become, often through pain, frustration, and misfortunes. In the next section, we'll dive into the inner conflict every trader faces, the paradox between waiting for confirmation and the fear of being left behind, the exact tension that Darvas learned to master, and most traders never do. The market doesn't punish ignorance nearly as much as it punishes impatience disguised as confidence. Every trader lives inside a contradiction, and until you understand this inner conflict, no strategy will ever save you. On one side, you know you're supposed to wait. You've read the books. You've heard the quotes. You've seen the charts marked up in hindsight where patience paid off beautifully. But on the other side, there's a quiet, relentless voice whispering, if you don't act now, you'll miss it. This is the paradox of trading. The more certain you feel, the more dangerous your impatience becomes. Nicolas Darvas felt this conflict intensely, especially in his early years. He wasn't born with patience. He earned it through repeated frustration. Imagine being on tour as a dancer, thousands of miles away from Wall Street, placing trades through delayed information, telegrams, and newspapers. No real-time charts. No instant feedback. He couldn't micromanage his positions even if he wanted to. At first, this felt like a disadvantage, but eventually, Darvas realized it was his greatest psychological edge, because while others were reacting, Darvas was waiting. Jesse Livermore described this inner struggle perfectly when he said that the hardest thing in trading is not buying or selling, it is doing nothing. Modern traders underestimate how psychologically painful inactivity is. When price consolidates, your mind starts inventing danger. Every small pullback feels like the start of disaster. Every pause feels like the market is about to turn against you. So what do most traders do? They act, not because the market told them to, but because their emotions demanded relief. This is where the paradox sharpens. Waiting feels irresponsible. Waiting feels lazy. Waiting feels like you're falling behind others who are constantly trading, constantly posting wins, constantly in the action. But Darvas learned something revolutionary for his time, and even more relevant now. Activity does not equal progress in trading. In fact, constant activity is often a sign of emotional discomfort. You're trading not to make money, but to escape uncertainty. And uncertainty is exactly where the best trades are born. Think about Darvas Box Theory at a deeper level. On the surface, it's a breakout system, but psychologically, it's a permission slip to wait. The box defines a boundary, a structure that says, until price escapes this range with force, I do nothing. No predictions, no anticipation, no emotional negotiation with the market. Livermore had a similar rule, though he expressed it differently. He waited for the market to confirm his opinion. He let price action prove him right before committing size. Both men understood that impatience comes from ego, the need to be early, the need to be right, the need to feel smarter than the crowd. But the market doesn't reward early. It rewards confirmed strength. Here's the painful truth most traders avoid. When you feel the strongest urge to act, it's usually because the market hasn't given you permission yet. That urge, the tightness in your chest, the compulsive checking, the constant rethinking, that's not intuition. That's emotional pressure. And Darvas learned to interpret that pressure as a warning sign. If he felt restless, he stepped back. If price was unclear, he stood aside. Modern traders, however, are taught the opposite. You're told to always be in a trade. You're shown highlight reels, not waiting periods. You're conditioned to believe that sitting in cash is wasted time. But Darvas knew cash was a position, and often the most powerful one. When the market goes quiet, do you feel calm or uncomfortable? Comment below. Your answer reveals more about your trading than any indicator. This inner conflict between patience and urgency is where most accounts are slowly bled dry. Not in massive losses, but in small, repeated emotional decisions made too early, too often, and without confirmation. In the next section, we'll go deeper into the psychological trap that keeps traders stuck here, the illusion of control and the need to participate, and why this trap causes traders to lose before the move even begins. Most traders don't lose because the market moves against them. They lose because they can't sit still long enough for the market to move at all. There is a psychological trap so subtle, so socially reinforced, that traders rarely recognize it while it's destroying them. It feels productive. It feels intelligent. It even feels disciplined on the surface. But underneath, it's nothing more than impatience wearing the mask of control. That trap is the illusion that constant involvement equals mastery. Nicolas Darvas fell into this trap early in his trading journey. Like most beginners, he believed that the more closely he watched the market, the more influence he had over the outcome. He adjusted stops too early. He jumped between stocks. He exited positions simply because price wasn't moving fast enough. And every time he did, the market reminded him of a brutal truth. Watching harder doesn't make price obey you. Jesse Livermore learned the same lesson decades earlier, through far greater pain. He said that after all his experience, he still found it hardest to wait, hardest to resist the urge to do something when nothing was required. That urge is not rational. It's emotional. It's the mind's attempt to reduce anxiety by taking action, even if that action is harmful. This is where most traders sabotage themselves. During the waiting phase, let's be precise. The market has phases: accumulation, expansion, distribution, and decline. The money is made during expansion, but expansion is born from boredom, from sideways ranges, from weeks, sometimes months, of nothing happening. And that's where impatience kills. When price stalls, your mind fills the void with stories. Maybe I was wrong. Something feels off. I should protect this small gain. What if it reverses? None of these thoughts come from price itself. They come from discomfort. And the moment you act on them, you've stepped into the trap. Darvas' genius was realizing that uncertainty is not danger. It's simply unresolved information. His box theory wasn't designed to eliminate uncertainty. It was designed to contain it. As long as price stayed inside the box, he refused to interpret it. No opinions, no emotional forecasting, just observation. Compare that to how modern traders behave. They zoom into smaller time frames. They seek confirmation from Twitter, YouTube, and Discord. They confuse noise with information. And the more inputs they consume, the more anxious they become. Livermore warned against this long before social media existed. He knew that too much information accelerates impatience. It creates the false belief that you must act because others are acting. But he also knew that the market doesn't move on your schedule. It moves when supply and demand shift, and that shift cannot be rushed. Here's the hardest truth to accept. Your job is not to force trades, it's to survive the waiting. Most traders never reach the phase where patience becomes profitable, because they exhaust themselves emotionally first. Small losses pile up, confidence erodes. They begin doubting strategies that would have worked if given time, and eventually, they abandon patience altogether, believing it's unrealistic in modern markets. Darvas proved the opposite. His distance from the market, physical and emotional, became his edge. He couldn't react impulsively even if he wanted to. And over time, he realized that his biggest wins came not from brilliant entries, but from not interfering once the trade was valid. Be honest, when a trade goes sideways, do you trust your plan or start searching for reasons to exit? Comment below. This psychological trap, the need to feel in control, is what causes traders to lose before the move begins. They exit during the quiet phase and re-enter during the emotional phase, paying higher prices for less certainty. In the next section, we'll step directly into Livermore's perspective on this problem, how he framed patience not as a virtue, but as a requirement for survival, and how his mindset aligns perfectly with Darvas Box philosophy. Jesse Livermore didn't call impatience a weakness, he treated it like a fatal trading disease. By the time Livermore had seen and lost multiple fortunes, he stopped romanticizing intelligence, predictions, and cleverness. What he respected most in a trader wasn't brilliance, it was restraint. And when you place Livermore's philosophy beside Nicolas Darvas' method, something powerful becomes clear. Their greatest edge wasn't timing the move, it was waiting for permission. Livermore understood the market as a living organism. You don't command it, you observe it. You wait for it to reveal its intent. He often spoke about being right and sitting tight, but that phrase is misunderstood today. It wasn't about stubbornly holding losing positions. It was about not interrupting winning ones simply because your nerves couldn't tolerate the silence. This is where most traders get it wrong. They think patience means enduring pain. Livermore and Darvas knew patience meant eliminating unnecessary decisions. Every extra decision is a chance to sabotage yourself emotionally. That's why Darvas boxes were so rigid. Price either stayed in the box or it didn't. No interpretation required. Livermore had his own version of this rigidity. He waited for what he called the line of least resistance. When the market was undecided, he stayed out. When it revealed direction through price and volume, he committed, and then he waited again. Modern traders struggle with this because waiting feels passive, but Livermore reframed waiting as active discipline. You're not inactive, you're protecting capital, preserving emotional clarity, and conserving focus for moments that matter. Here's a crucial Livermore insight most traders ignore. The big money is not made in the decision to buy or sell, it is made in the decision to hold. Darvas arrived at the same conclusion independently. His biggest wins didn't come from catching bottoms or tops. They came from entering after confirmation and staying in while price trended, even when pullbacks tested his patience. Think about how uncomfortable that is psychologically. You're in profit. Price pauses. It pulls back slightly. Every instinct screams to lock it in. Livermore saw this urge as fear masquerading as prudence. If nothing in price structure had changed, exiting was emotional, not logical. But here's the balance that both men respected. Patience without rules becomes hope. That's why structure matters. Darvas waited inside rules. Livermore waited inside market confirmation. Neither waited blindly. This distinction is critical for modern traders. Impatience and recklessness lose money, but so does stubbornness disguised as patience. The difference is whether the market has invalidated your premise, not whether your emotions are uncomfortable. When you exit trades early, is it because price broke your rules, or because you couldn't tolerate the uncertainty? Comment honestly. Livermore believed most traders failed not because they lacked knowledge, but because they lacked emotional endurance. An endurance isn't built in fast markets or exciting breakouts. It is built in the quiet, frustrating periods where nothing happens. Your discipline is tested daily. Darvas embraced those periods. He used them as filters. If price wasn't ready, neither was he. In the next section, we'll bring this philosophy to life with a real-world story moment, a scenario that shows exactly how traders lose before the move starts, and how Darvas-style patience changes everything. I once watched a trader exit a perfect trade 3 days before it changed his entire year. This wasn't a beginner. This was someone experienced. disciplined, technically sound. He had identified a stock forming a clean base, tight range, declining volatility, rising relative strength. In Darvas terms, the box was clear. The rules were defined. The breakout level was obvious. He entered early, not recklessly, but slightly ahead of confirmation. And that's where the story begins. For the first few days, nothing happened. Price moved sideways. Volume dried up. No breakdown, no breakout, just silence. And in that silence, doubt crept in. He started checking the chart more often, zooming into smaller time frames, interpreting minor fluctuations as signals. The box felt smaller. The patience required felt larger. By day 4, he was emotionally exhausted, not from losses, but from waiting. He told himself a story. If this was real strength, it would have moved by now, so he exited. Flat trade, no damage, he said. 3 days later, earnings hit. The stock exploded out of the box with volume Darvas would have loved. It ran 40% in 2 weeks. He was right, and he still lost. That's the cruel irony of impatience. It doesn't punish you immediately. It punishes you by excluding you from the move you correctly anticipated. Nicolas Darvas lived this scenario repeatedly before he learned his lesson. Early on, he admitted that his biggest frustration wasn't being wrong, it was being right too soon. He would identify leadership stocks, enter during consolidation, and then exit during boredom. Only later did he realize that consolidation is not failure, it's preparation. Livermore described the same phenomenon in his own words. He said that after he learned how to buy and sell, he still lost money because he couldn't wait. He mistook time for danger. He treated inactivity as a warning sign instead of a neutral state. Let's break down what really happened psychologically in that story. The trade didn't fail. The plan didn't fail. The trader failed to endure the emotional gap between entry and expansion. Modern markets amplify this pain. We're conditioned to expect immediate feedback, likes, replies, instant results. But trends don't care about your dopamine cycle. They build slowly, invisibly, until they suddenly become obvious, at which point the risk is higher and the reward is smaller. Darvas boxes protected him from this exact mistake. As long as price stayed within the box and volume didn't violate his rules, he did nothing. No interpretation. No impatience-driven exits. The box was his psychological anchor. Have you ever exited a trade out of boredom only to watch it run without you? Share your story below. Others need to hear it. This story illustrates the true cost of trading without patience. Not blown accounts, not dramatic failures, but missed opportunities that slowly erode confidence and trust in your own ability. In the next section, we'll reach the emotional low point, the moment where traders either evolve or repeat the cycle, and how both Darvas and Livermore confronted this turning point in their careers. The most dangerous moment in a trader's life isn't a big loss. It is the quiet realization that you keep missing the moves you knew were coming. This is the emotional low point few traders talk about. Not panic, not despair, but something far more corrosive, self-doubt born from repeated near misses. You start questioning your instincts, your strategy, your discipline, and the cruel part? The market keeps proving you right, just not while you're still in the trade. Nicolas Darvas reached this low point before his breakthrough. He openly admitted that his early failures weren't random. They followed a pattern. He would find strong stocks. He would enter logically, and then he would sabotage himself by exiting during consolidation. Over and over again, the pain wasn't financial, it was psychological. Being wrong is easy to accept. Being right and unrewarded is unbearable. Jesse Livermore described this phase as the most dangerous in a trader's development. When you stop trusting patience and start chasing validation, you begin entering later, exiting faster, and trading more often, trying to force results. This is where traders either evolve or spiral. The emotional low point comes with a question that haunts you. If I'm right so often, why don't I have anything to show for it? Darvas didn't escape this by learning more indicators. He escaped it by changing his relationship with time. He realized that time is not the enemy, emotional interference is. So he designed rules that removed him from decision-making. During the most psychologically vulnerable phase, waiting. This is where Darvas' genius truly reveals itself. His system wasn't built to maximize trades. It was built to minimize regret by defining when he was allowed to act, and more importantly, when he was forbidden to act, he protected himself from his own impatience. Livermore reached a similar turning point after multiple financial collapses. He realized that the market didn't defeat him. He defeated himself by overreacting. He learned that once a trade was valid, The only enemy left was his own nervous system. This emotional low point is where most traders quit, or worse, harden into bad habits. They label patience as unrealistic. They say things like the market is different now, or you can't wait anymore. But Darvas traded in noisy, speculative markets too. Livermore survived bucket shops, panics, and booms. The environment changed. Human psychology didn't. Have you ever felt this moment where you're tired of being right without being paid? Comment below if this resonates. This is the fork in the road. One path leads to overtrading, frustration, and burnout. The other leads to structure, patience, and emotional control. Darvas chose structure. Livermore chose restraint. In the next section, we'll uncover Livermore's breakthrough rule, the principle that transformed patience from a weakness into a weapon, and how Darvas unknowingly built the same rule into his box theory. The moment Jesse Livermore finally became consistently profitable, he stopped trying to be involved and started insisting on being invited. That single shift in mindset is the breakthrough most traders never make. Livermore realized that the market does not reward participation. It rewards alignment. You don't push your way into trades. You wait until price action pulls you in with undeniable force. His breakthrough rule was simple, brutal, and emotionally demanding. Only act when the market confirms, and once confirmed, do not interfere. This wasn't theory. This was survival wisdom earned through ruin. Livermore learned that impatience didn't just reduce profits, it destroyed entire fortunes. Every time he anticipated instead of waited, he paid for it. Every time he micromanaged a position out of fear, he crippled his own edge. Nicolas Darvas arrived at the same rule from a different path. His box theory was nothing more than confirmation turned into structure. A stock was irrelevant until it proved itself by breaking out of a defined range with volume. Until then, Darvas refused emotional engagement. Here is what most traders miss. Darvas didn't wait because he was calm. He waited because his rules made impatience illegal. That's the lesson. Patience is not a personality trait. It's a design choice. You don't rely on willpower. You build systems that remove temptation. Livermore talked about this constantly. He said that the market teaches you how to trade if you're willing to listen. And what the market says over and over is this: I will move when I am ready, not when you're bored. The breakthrough comes when you stop interpreting waiting as lost opportunity and start seeing it as risk reduction. Every premature trade increases exposure without increasing probability. Darvas understood this intuitively. His boxes filtered noise. His trailing stops protected profits. His rules freed him from emotional second-guessing. Do your rules protect you from impatience or give you excuses to act? Comment below. This breakthrough rule transformed patience into a weapon. It allowed Livermore to hold winning positions through pullbacks. It allowed Darvas to ride trends that others exited too early. In the next section, we'll translate this timeless lesson directly into modern trading, environments, screens, alerts, social media noise, and show how Darvas-style patience applies now more than ever. The market didn't become harder, your environment became louder. If Nicolas Darvas were trading today, his greatest enemy wouldn't be volatility, algorithms, or high-frequency trading. It would be constant stimulation, notifications, opinions, screens filled with movement that feels meaningful but isn't. Modern traders don't struggle with patience because markets are faster. They struggle because they are never allowed to be still. Darvas traded with delayed data, limited access, and physical distance from Wall Street. What seemed like a disadvantage was actually insulation. Today, you have instant charts, real-time news, social sentiment, and 1,000 reasons to second-guess every position, especially during the waiting phase. Jesse Livermore warned about this long before technology exploded. He said that opinions are more dangerous than ignorance. In today's world, opinions are infinite. Every pullback has an explanation. Every pause has a bearish narrative. And every consolidation tempts you to exit early. Darvas-style patience is more relevant now than ever because modern noise attacks the exact phase where money is made. Trends don't start with excitement. They start with quiet strength, tight ranges, low volatility, boredom. And boredom is intolerable to most modern traders. So how does this philosophy apply today? First, you must accept that doing nothing is an active decision. Cash is a position. Waiting is a filter. Darvas didn't feel pressure to trade because his identity wasn't tied to activity. He wasn't trying to be entertained. He was trying to be right and paid. Second, you must design your environment to support patience. Livermore didn't sit in front of the ticker all day. Darvas didn't stare at intraday fluctuations. They reduced exposure to noise. Modern traders must do the same. Fewer time frames, fewer opinions, fewer impulsive inputs. Third, you must redefine success. Modern culture celebrates screenshots of entries and exits. Darvas celebrated holding. Livermore celebrated sitting tight. If your definition of success is excitement, patience will always feel like failure. What's the biggest thing that destroys your patience? Charts, news, or other people's opinions? Comment below. The irony is this: technology makes it easier than ever to be impatient, and more rewarding than ever to resist it. Trends still exist. Human behavior hasn't changed. Only the distractions have multiplied. In the next section, we'll break this philosophy down into step-by-step practical implementation. How to actually build Darvas-style patience into your trading process without relying on willpower. Patience doesn't appear when you need it. It is engineered long before the trade exists. This is where most traders fail to convert philosophy into profit. They agree with Darvas. They quote Livermore. They nod along when patience is discussed. But when the chart goes quiet, their behavior doesn't change, because nothing in their process forces it to. So let me walk you through how Darvas-style patience actually looks in practice, not as motivation, but as structure. Step 1. Define no-trade zones before you ever enter. Darvas didn't just define entries, he defined an action. His box wasn't only a breakout level, it was a psychological fence. As long as price stayed inside it, he refused to interpret movement. Modern application: before entering any trade, define where nothing changes your bias. If price is within that zone, you are not allowed to adjust, analyze, or react. This removes emotional decision-making during boredom. Step 2. Delay commitment until price earns a Livermore never argue with the market. He waited for confirmation. Darvas waited for expansion with volume. Both require price to prove itself. Modern application: if you feel urgency, you're early. If you feel calm after entry, the market invited you. Design rules that require confirmation, not anticipation. Step 3. Remove intraday surveillance. Darvas couldn't watch every tick, and that saved him. Livermore knew that watching too closely amplified fear. Modern application: once in position, reduce screen time. Check structure, not noise. Most premature exits happen because traders observe fluctuations they were never meant to respond to. Step 4. Predefine exit conditions that are structural, not emotional. Both Darvas and Livermore exited when price invalidated their premise, not when discomfort appeared. Modern application: your exit should only trigger when structure breaks, not when anxiety rises. Step 5. Measure success by rule adherence, not P&L. Darvas measured discipline. Livermore measured alignment. Modern application: if you followed your rules and waited correctly, it was a successful trade, regardless of outcome. Which of these steps do you struggle with most? Comment below. Awareness is the first upgrade. This is how patience becomes operational, not inspirational. In the final section, we'll bring everything together with a cinematic conclusion: the emotional truth about waiting, the silent power of restraint, and why most traders lose before the move starts. The market never cheats you, it only exposes who you become while waiting. If you remember nothing else from this journey, remember this: most traders don't lose money in trends, they lose themselves in the silence before them. Nicolas Darvas didn't win because he predicted the future. Jesse Livermore didn't succeed because he was faster than the crowd. They won because they respected a truth that feels almost offensive to modern traders. The market does not need you to act. The greatest moves begin quietly. No excitement, no applause, just a narrow range, shrinking volatility, and an uncomfortable stillness that tests your identity as a trader. And in that stillness, most people panic, not outwardly, but internally. They start negotiating, rationalizing, interfering. Darvas refused to negotiate with boredom. Livermore refused to negotiate with fear. They waited, not passively, but with rules, boundaries, and emotional discipline. They understood that patience is not about suffering, it's about trusting structure over sensation. Think about how many times you've been right and left early. Think about how often the market confirmed your idea after you gave up. That pain isn't punishment, it's instruction. The market is teaching you something every time you exit too soon. Your edge wasn't wrong. Your timing with yourself was. This is why trading without patience is so expensive. It costs you not just profits, but confidence. You stop trusting your analysis. You stop believing in trends. And eventually, you stop believing in yourself. But patience can be rebuilt, not through motivation, but through design, through rules that protect you from your own urgency, through boundaries that make interference impossible, through acceptance that waiting is not wasted time, it is the price of admission. Darvas paid that price. Livermore paid it many times over, and every trader who survives long enough eventually pays it too. The only question is whether you pay it upfront with discipline or later with regret. If patience has ever cost you a great trade or saved you from a bad one, share your story in the comments. Your experience may be exactly what another trader needs to hear. And as you walk away from this, remember, the market doesn't reward the fastest hands. It rewards the calmest ones. Sit tight, let price speak, and don't leave before the move begins.